Good morning, everybody. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for March 30th. I honestly think the biggest risk for the grains is going to be planting intentions tomorrow. Yeah, we've got continued up and down craziness with whatever going on with Iran. We did hit 103.38 last night in crude oil. We're trading at 101.40 now. I think as long as we stay under 120, which is the high spike, and then I think a lot of this is we're all just waiting together as a world to see how this turns out. Interestingly, the stock market is up 300 points. The S&P is up 500, excuse me, up 54 points. The Dow is up 380. Nasdaq's up 200. Uh, so that's telling you that people think that maybe there is something behind the scenes where we may get this thing worked out. In the grain markets, a good range overnight, 6 cent range in corn. We traded as high as 94 in new crop beans. We're trading back down to 87, down 2.5. I am not a big fan of the overnight markets. You know that. I'm more concerned about what happens during the day. November beans traded to 52 and a low of 43, up 1 3/4 cent. The July wheat, Chicago down a nickel with another 12 cent, 13 cent range overnight. Kansas City down a dime. Kansas City had been on a more powerful rally than Chicago. Um, we'll see. Again, I think the biggest risk heading out tomorrow is what happens with the acres report. Can't say that enough. So there are reports that matter more than others. We get one every month. The big ones usually are the January final production number, which was disappointing. We also put our lows in there this year. Usually, this report, the planting acres, is important. It has a history of creating price uh, rediscovery, right? What does that mean? We go up or down sharply, right? And then the last one I would watch would be the June report. Those three reports are going to be very, very important, other than a weather issue. And I would, look at where we are compared to where we were. Yeah, we're not where we want to be, right? But we do have 487 new crop corn, and we have 1145 new crop beans. Back in December, we worried about sub $4 corn and sub $10 beans. So I know it's not what guys need, but it's better than what we were at. And I'm a big believer that at least once a year, if not twice a year, we get a chance to market grain at profitable prices. Now, it may not be the profits that we want, but it's better than practicing farming, right? Nobody needs practicing farming. So when it gets to that price, and this is going to be very important, you have to know where your levels are. And yeah, you have to factor in your basis. And I know that that's a big part of everybody's risk, but I can't control your basis. I can help you hedge the flat rate, the flat price risk. So on that note, we'll see what happens here today. It is Monday. We do have the big report tomorrow. My guess is that um, the managed money is going to stay put with the way they're bet right now. I broke all that down in Friday's letter. If you're not getting my letter, go to robinsonagmarketing.com. Keep your eyes open for today. Today I'm going to do the webinar. I was going to do the webinar over the weekend, but I kind of wanted to wait and see what happened with crude oil. So now we've got that behind us, and we can look ahead and hopefully you watch that webinar and enjoy it. In the protein complex, we're going to see if we can break out of this wedge. There's a wedge in both fat cattle and feeder cattle with two distinct trend lines. We did finish higher last week in fat cattle and feeder cattle. We'll have to see if that extends today. All right, this is Chris Robinson. Give me a call. Have a great rest of the day. Thank you for your time.